Hey, you guys that are early, welcome. Good evening. Um, Nothing, it's early. I'm not starting yet. We still have 5 minutes, but figured I'd get set up. Um, I can tell my sound is working because I have a way to check that now. I can't tell if my video's on. You guys seeing my Twitter deck? Can anybody type a yes in the chat, please, if you can? Yes, okay, thank you. All righty. We got some good action tonight, so this could be fun. That little sell-off we had right at the end of the regular, right middle of the end of the regular session, right before FOMC, was a good catalyst to get some things moving. So I'm pleased with that. Anywho, we'll start in earnest in about 4 minutes. I'm going to mute myself here, and I will be back then. Okay, I see Trader PD rolled out of bed there. It's 4 a.m. for you, right? Hey, you know what? I think if anybody who has an intention of making a living in this business, you have to get used to working around the clock and trying to adopt polyphasic sleep. There are other ways to do that, when you're in the office and when you're not, and using assistants, and there's ways to manage your time around that once you get some critical mass. But I strongly recommend that you um, abandon any traditional idea of the traditional 8 hours of sleep and working normal daytime hours, because regardless of where you are, that it's not that it's unrealistic in trading, it's that it's not opportunistic enough, and you need to be opportunistic when you are trading for a living, because stuff comes along and it's silly to miss out just because I don't trade that time of the day, or whatever it is. So I strongly encourage you to adopt that approach. Okay, I'm just cleaning some crap up here. So while we're waiting for it to be officially 6 o'clock my time. Oh, let's see. We don't need that one. Okay. I truly think, and the term that I'm using here, I'll type it for those of you that don't know the term, sorry, I'm looking and typing, polyphasic sleep. Look that up. That is what I do, and I strongly recommend it for anybody that is in this business. So, and also, just in housekeeping, a couple of people said to me, either privately or in one of the channels, that, that's 3 o'clock in the morning or whatever, I'm asleep then. Hey, guess what? Look at the times I'm doing these sessions. 6 at night here, 5 in the morning here. We're going to do one at midnight. So get over yourself. Okay. 6 o'clock, we are starting officially. Notice how my little pop-up alarm came up. I have this as one of the ways that I accomplish resetting myself into the overnight. And for those of you that are relatively new, and there's a couple of us that just joined the workshop, I refer to this process, and this is my process, but I refer to building a process for yourself as kind of the key thing you have to do to be a successful trader. It's not about indicators. It's not about anything but understanding order flow and then finding repeatable patterns in order flow. That's all it is. Forget everything else you know, at least while you're talking to me. So, there's a couple of concepts. One is this idea of resetting that I just mentioned. And the other is we are going to talk about the range. I do have it listed as a scalp mode trade, but it's really much more comprehensive than that in kind of the way the Open 5 was, in that there's really many trades within there. It's a price behavior that creates the opportunity. And that's really what we're talking about. And the reason that I chose to do it at night, and this workshop is called what it is, about trading GC and CL and trading the overnight and the introduction to ranges. The reason I did that was also very deliberate, and it is that this time of night, you know, things haven't been trading that much. Look at the volume. We've only got 80,000 contracts traded in the ES. So the ranges that we do have are not very well defined yet. You know, for example, you know, here's the 5 minute. That was the session today. This was the overnight before it, and then we're in the new overnight. And again, for those of you that are relatively new, I break sessions up into regular trading hours and the overnight, and I run separate profiles. And basically all the stats are separated that same way. So, and there's some really good things to understand about the distinctions between those two things, the regular session and the overnight session, regardless of the instrument. And yeah, what qualifies as regular trading and overnight is different depending on what instrument you're talking about. For our purposes, we're talking about the United States market hours, the indexes for regular trading hours, and gold and oil. But you know, you can kind of adopt that to your time zone. I also still maintain this. You know, we've talked about, you know, whether you should trade the DAX or, you know, any of the other indexes that are available to some of you people trading in Europe and in Asia. And my position on that remains the same. I think there's good opportunities there. However, if I were you, I would take advantage of the fact that it's evening for you when we're opening up in the morning. And you get, it's, for my body clock, that is the absolute best way to trade the open in New York. So keep that in mind. You don't think you have to trade daytime, the markets that you live in. It's really much more global than that. Think about being fungible in the markets that are applicable to the strategies you're trading and the best place to go make money, because that's why we're here. That's really more important than that other stuff. So, you know, sure, yes, everyone has lives and, you know, spouses that don't stay up all night. But trust me, I've worked through that. There are ways to make that happen. If your primary objective is removing money from the market on a daily basis, then you make everything else work around that. And that's really a philosophy that I would strongly recommend everybody adopt, particularly at this point in your career. You know, I have a little more flexibility because I can go to, you know, other countries and I don't have to worry about doing it every day. And I've got some history and some resources built up. But that notwithstanding, if I were you and I was starting where you are, and even in my situation, you know, I'm in California, getting up early is kind of an advantage here. You know, by 9 o'clock, I'm done for the day and I can do whatever I want, assuming, you know, I'm just trading the open. So, so really give that a thought. You know, a lot of you are a little too rigid on that, you know, particularly some of you over in Europe, and I realize the limitations. But again, the moral of the story of this whole paragraph, if there's a way you can trade the US indexes and gold and oil, I think you pretty much can trade 24 hours and find plenty of opportunities without looking at the DAX or any of those other markets. Again, that doesn't mean they aren't good opportunities. It means that I think these might be better for your skill set. Once you have real solid order flow skills, you can adapt anywhere. But if you're going to markets that are really thin or thinner, say, than these, it's harder to read those until you get good at it. Because you got to give them more room. You know, I'm just like the difference between the ES and the NQ. You know, you can't use a one tick stop in the NQ. It just isn't reasonable. The spread's often more than that. But, you know, regular trading hours in the ES, that's doable. It's doable in oil, you know, but only when those are really active. So with that introduction in mind, let's see. Okay, good. A lot more people showed up. I was also killing a little time till we got some critical mass. I see some of our new folks are here. Welcome, you guys. This is the first session you've heard me live, so I'll give you a little bit of, I'll answer your question in a second, Kavika. Yes, John from, I believe you're in South Africa. Welcome. You're the Michael Lee crowd, right? Okay, so anyway, let's talk about, before I do that, let me ask a 4 a.m. there. Cool. See, you know what? To me, that's prime time. It's, you know, a nice time. You get up, do a little trading. There's a couple of patterns that occur at night, you know, in this, and I always, again, for you new guys, I only use my time zone. I don't constantly change it. I'm not using the market time zone. So if I'm saying like 6 p.m., you know, that's what it is right here. And convert it to your own. Okay, so let's see, Kawika, your question about polyphasic sleep 4x6. I don't try to do it in rigid blocks. What I do is I try to do it in productive blocks. So for example, I frequently take I trade, you know, 5 a.m. to 9 a.m. here, you know, the open plus a little bit. And then I'll take a nap for an hour and a half. I find that like 90 minutes is really good for just, you know, getting refreshed enough to go back and scalp some more, for example. So there's other times, if I'm trading at night, I'll trade this 6 p.m. and I'm going to explain what that is in just a minute. And then I'll crash for a few hours and I'll come back for the midnight. And what I'm referring to again there is this little reminder that came up a second ago, this one, Asia active, oil, gold in a few hours. There's a pattern that's repeatable, and that's why I chose to do this session at this time of the night or evening or morning, wherever you are. So just think about what's going on in the world. And if you need a reference map, there's a couple of good ones out there. There's a real good one on investing.com. And then there's another one on My Time Zone Buddy or something, and World Time Buddy, that one. So you can kind of see, like right now, you know, here's where I am. London's 2 a.m. Hong Kong, it's 10 a.m. Dubai, 6 a.m. So this is a good reference point to understand what's going on in the world. So right now, the Middle East and Asia are waking up. And that's why this is a good gold trade, and that's why this is a good oil trade, because the indexes may or may not develop into something tradable at night based on the news flow generally. But these guys always have a similar set of setups, and some of them make sense and some of them don't make sense, which kind of goes back to that theme that I started at the very beginning of our workshop, which is the first thing you want to do is stop trying to understand why things happen. There's a lot of variables, and that becomes an exercise in futility. But having said that, there's a very interesting set of oil trades at 6 p.m. my time. And then for the next 2 hours or so, it sets up. And then if you look at it again a few hours later, you can kind of see the result of the setup and get a second shot at it. So let's start with that one. So here's a 5-minute, and I just want to be able to see a few days so you can see what I'm talking about. So it's easy to see the days on here. They're the ones that have the opening fives and the first hour high and lows. So, you know, there's a regular trading session. There's one, there's one. So we got 3 of them here. And then we can see the overnights in between. And it's interesting because, for example, let's start here. You know, we had an overnight that took us all the way down there, and then, you know, this is almost a flip setup. And I've talked about that a little bit, but it would have been more of a flip if it happened right at the open. It turned out to happen right before the open, but this is the behavior I'm talking about. You know, we'll kind of drift along during the night, and then right before the open of New York, or sometimes right after midnight my time. So, you know, here would be an example of that here. So this was, you know, again, middle of the night. Between these 2 sessions, you get these moves that kind of go one direction on a lot of volume, and then they turn suddenly. They don't do it like high volume reversals do, because the volume is not high enough to generate, you know, a spike like that. But what they do is pretty obvious if you just kind of watch, you know, the ebb and the flow. So I'm going to give you more detail on this in a minute. I'm not trying to give you the detail now. I'm just trying to give you a sense that this seems to occur regularly. So here's one that was a reversal down on the low. It's an edge play, if you remember those. And then it does, you know, a beautiful move for what? 70, almost 10 points, you know, and at $10 a tick per contract, that's a really sweet trade in the middle of the night, you know, and there's not a lot of competition. There's not a lot of big players going. Same thing happened over here. This was before, last night before today's session. It did the same thing, but it did the other way around. And again, it always occurs right around the same time. And, if you look at the world clock, that makes some sense. And if you look at, there's a few things that are kind of stereotypes, but they're not. Like Asians like to buy and sell gold. Yeah, stereotype. Yeah, it's also true. And again, if you look at the time clock and, what time it is in the Asian markets when it's, between 6 p.m. and midnight my time, this all starts to make some sense. So, yeah, Amy, when I was trying to just trade for a living and have a life when I was younger, and, that was more important. I'm talking about when I was 40, not 59 like now. That's what I did. I basically just traded the open. And my favorite play, I used to call it the 2 and 2. This is in 1999 and 2000, 2001, in my Dr. Jeff's day trade clinic. And we did that every morning. And, you could make 10 grand on that with a couple of contracts. It was crazy. And it kind of redeveloped and evolved into the opening 5. The algorithms got more sophisticated and program trading, quote unquote, kind of went away and became algorithmic trading. Program trading was a tactic that the big funds used to use, switching from, they would go from a basket of stocks and then they would fade that trade on the futures that were impacted by those stocks, and then they'd flip it around the other way. So they were literally scalping their own arbitrage, and they used to do this all day. And you could spot it if you watched the tick. The tick would suddenly go up or suddenly drop when they started doing it. So anyway, this is literally just a modern manifestation of that in our open 5 and this gold trade. And you can go back as long as you want. I don't have any more days on this chart because I don't want to plug up Ninja with too much data, but go back and look at that as far as you want, and you will see that pattern recur over and over and over again. And we will talk more about it in the context of ranges, but I just wanted to throw out there that, if you're one of those people that has a job in the United States, and so you don't even have an opportunity to trade until the evening, East Coast, West Coast, whatever, this is a really good thing to do because, you can still go to bed by midnight, and get up in time to go to work. So keep an eye on that one. And by the way, just the kind of protocol here, again, for you that are new, and everyone else already knows this, but the text chat, feel free to type questions. And cool, Dave. All right. And yeah, see, you guys, so there it is. This is one trade you could do from work. And if you had a decent charting platform, you could even execute it, on a mobile platform, as long as you weren't trying to chart it on one. For example, this might be something, if you really had to use TS Trader or Tradovate, this might be a way to do it, just executing market orders over there and charting it on your desktop at work or whatever. So that's an idea. Okay, so let's go back. I mentioned there is the nighttime gold trade. It occurs typically 2 times, again, just recapping, around 5 or 6 p.m. here on the West Coast, and then again midnight to 2 a.m. or so is when you start seeing the move. As I showed you on the charts, it might continue all the way into our regular trading hours, but it's a really nice trending edge range move to trade. So that's why I'm showing it to you. Now, with respect to oil, let's have a similar look. I would rephrase that, David, as not make money while making money, make money while trading time for money. Jobs are trading time for money. And trading is not doing that. Trading, because math scales perfectly, is simply an exercise in professional speculation. And again, I know some of you were wrestling with that term. Hopefully you've had time to think about it. That is what we do. We are professional speculators. And there literally is no limit to how much money you can make per hour doing this. It's simply a question of what you can afford to risk and how skilled you are. It's that simple. Now, it's not that simple to do, but I think it's just a matter of practice. As most of you are starting to learn, those of you that are just joining us, let's see, is Felipe here? I think I'm pronouncing that right. Is it Philippe? Can you answer me in the text there? You're one of our new ones. There you are. Yes. Okay, it's Philippe. All right, cool. You're brand new, and I want you to watch all the old videos before you ask any questions, except what I say in this one, perhaps. But I would like you to really consider what I'm saying about order flow. Really being the key here. You have to totally divorce yourself from any preconceived notions you have. So we call it the tabula rasa here in the group, but basically, you know, support, resistance, those words are meaningless. And so any indicator you can name, they're just simply not useful. It's only about the volume and who's in control of that volume. So here's oil. And again, you know, we get this overnight play a lot in oil, and it tends to occur around midnight. There it is right there a couple of days ago. And if we go back, here's another one. And these moves are really significant, guys. You know, 56, let's just call this 56.80 here. And this was a flip, by the way. You know, it went down overnight, and then the second it opened, it just skyrocketed up. There might have been an inventory report in there. Again, we don't care why something happened. We're looking at the results of buying and selling behavior and where we want to play. So what is this move? What, 56.70 to 58.20? Oil is $10 a tick. That's $1,000 a point per contract. This is a nearly 2-point move, or 1.5 anyway. One lot, $1,500. I mean, again, the game is to find asymmetric risk reward. So this was a perfect setup right here because, number one, it's the edge of the profile. It turned very aggressively for whatever reason it did. It gave you an entry point a couple of times. And again, this happened in the middle of the night. So what are some entry points? Well, you could have bought the turn on a 5-minute. That's hard to do. Let's zoom in on this on something a little bit faster. So let's see. That occurred. What was that? Am I on the right day here? Let me just see. No, here it is here, I think. Hang on one second. Let me make sure I'm looking at the same days. Okay, that's the 15th, right before regular trading hours. Hang on one second, guys. Where's my other one? No. Sorry. There's quite a few of them here, and I'm not sure where I put that one. Wait a minute. And all the cool arrow, by the way, just all the cool arrow features that you guys sometimes tell me, oh, use Alt-Tab, this, that, doesn't work when it's running Zoom. The Zoom disables arrow. So basically Windows sort of disappears. So it's kind of annoying. And I apologize. I've got to go find this one. And it must be up here because it's not. Oh, it's not letting me scroll my windows either. Okay, this could be a problem. We had this happen once before. I think if I stop sharing, that fixes it. Hold on. I'm gonna, let's see, asymmetric. Yes, I do, but I'm gonna answer that more thoroughly in a second, David. Hang on, guys. I need to unshare and then share, and I can fix this. Okay. All right. Okay. It's, let's see. Yeah, Do you guys, I can't see the chat. Hang on one second. This is what happens. All the controls disappear. Okay. Okay. Chat's back. All right. Can you guys see my main screen again with the 5-minute? Yes. Okay. Cool. I'm not going to try to move it around. This Zoom, if you're just joining new, Zoom disables Windows arrow. And since I'm running so many windows here on 3 monitors, it just, it becomes cumbersome. So I'll just talk about it on a 5-minute view. But if you go back on your own, what I started to say was, you know, where could you find entries? Well, if you jumped in, I guess we could just do this real quick. That would work. Even if you just took this down to like a 1 minute, although you guys know that I prefer faster than that, you'll see how you could have gotten just a ton of different entries. And risk, again, is asymmetric, and it's, once you're in the trade, it never goes against you. So asymmetric means that it's just overwhelmingly one way or the other, David. So for example, if I got long here, it's really clear if I'm wrong because it's going to go below that. And as the trade develops, it just gets more and more profitable. This is the kind of trade you would add to as it went, because you'd have no reason not to. You know, it keeps making higher highs and lower or higher lows and higher highs, and it's doing it on increasing volume. So, you know, that's the definition of order flow right there. So again, I don't want to get too distracted on this point, but if you combine a lot of the concepts that we've discussed, and for those of you that are new, go back and watch the session called Putting It All Together, and you'll get the idea here about what I'm talking about. But this one's a good example. We have edges, and that's a setup that we like a lot. We are also doing a range, which I'm going to explain in a minute, and it's giving you asymmetric risk reward. So you get all that together, and you literally don't have a good reason not to take the trade. But I adjust my risk for anything in the overnight, and I do that for one very simple reason. Because the volume is low, anything that's outside of ordinary volume that suddenly comes on board, I'll explain that in a second, will be overwhelming, and I could get trapped in the trade. So what I don't want to do in these overnight trades is jump into them and say, well, that's got good risk reward, it's asymmetric, I'm going to put on a 15 lot in oil. No, really bad idea. What you want to do is you want to do, again, what you've heard me say over and over again, you want to nibble. Put on a 1 lot. Gets profitable? Cool. What I would do in that circumstance, again, using a 5-minute time frame, but I trade faster time frames than that, I would probably add to that trade right here, because I'd say, well, it didn't take out that low or this low, so I'm still profitable, but it's giving me a chance to add to it. And then if it comes down, the worst case is I get out break even, but if it starts to go my way again, which the volume is suggesting it's going to, then all I'm doing is magnifying my rewards and I'm not adding any risk. So that's the thinking there. Okay, so I just mentioned one of the sort of rules of trading the overnights, and it's a really simple one. And I'm going to show it to you in my process world too, but one of my other charts disappeared again, so hold on one second. I think I can find this one quickly. It is the CL 30-second or 20-second. I don't see it. Okay, it has hidden it again. Oh, well, all right, we'll find it when we need it. So, oh, we got some great action. Look at this. Gold's getting pushed down. Look at the, God, I'm tempted to just throw some trades on and then explain what I'm doing. So I think we might do that. Okay, we've got one long over here on gold. You'll see why in a second I'm doing that. There's some sort of news event that's pushing equities up, but they've still been weak all night. So we probably want to go ahead and get short there. Great, let's get a stop. Well, it's not going to make it easy for us. I'm playing momentum here. You guys know the momentum setup. All I want to do is get a stop between me and my trade. These are both negative at the moment, but I'm not worried about that. This one I might add to. In fact, I like it. It might be too early to do that, though. Again, I'm about to tell you more about the gold trade. But for now, let's just see if we can scalp some there. And what we're trying to do over here on NQ is get a stop between our trade and the current price. But see, it keeps taking me out. That's how you do the H momentum, the high momentum, because this is what just happened, guys. And basically, I'm fading it. Whatever caused this to come up here, again, it's asymmetric risk and reward. All right, now it's pushing to new highs again, so you don't want to do that. You want to let it settle. And this trade's probably not going to work out, but we'll give it a few minutes. This one's going again, so it takes a little management. Probably the best way to pay this is like that. So now we're at least getting some protection to our profits. Okay. Oh, we've actually been making money on those, but it's pretty funny. And notice how this one's coming back to us over here, which is what I was expecting it to do. So let's see if we can't scalp out over there too. Trying to add to this right now is what I'm doing. And good, we got 2 more, awesome. All right, so now let's start scaling out of it. Going that way. I'll explain all this crap in a minute. We just got a good opportunity for me to actually do it. So I am, so let's see, okay, boom. Come on, fill me. Oh, wow, that's choppy. It actually tagged me and did not fill me. And I'm Q1, there we go. Okay, and I'm Q1 here, which means I literally just has to, boom. Okay, cool. And now we still have 1 short here, so we'll put a stop in and we'll see if we can't get that as a runner. And, ooh, cool, we're right on the inflection point there. You guys were asking about when I reset. That's when I do it. I want to watch that point right there that I'm just above. I want to see if everyone will sell there, so we can add to this, but otherwise we'll keep it right there. That's the spot that everyone's jumping in and selling at. Ignore this over here for now. We'll come back to that. Watch this NQ trade. Watch the indexes. They're all at highs for the session, and they're all getting sold pretty heavily up here. What does that look like on the fast chart? Look at the range on the LRCs. It's tightening up and it's accelerating down. So this is a trade you would probably want to add to if you weren't doing a webinar at the same time. But I'm going to tighten up my stop a bit, lock in a little more profit. But and we'll probably get hit here in a second, I'm guessing. That's why I did that. But that's a nice little scalp. Oh, no. See all these guys trying to sell right up in here? That's why I'm trying to get out, because everyone's seeing the same thing I am. So we're probably going to get a bounce. And I will add to this if it gets down there. I'll explain why. We'll come back over there in a minute. We're managing this trade right now. Isn't this fun, guys? Ignore this P&L here. That's a different account. I'll switch it when I have a second to the account we're actually trading. I have several, as you guys know. Okay, so that's our P&L since we started the workshop. Slightly down here, although we're about to get profitable over there. Let's take the first one off faster and leave the other one for a little more. This trade's working nicely. Let's lock in a little more profit. I would have added to this if I wasn't talking and doing the gold trade at the same time. We're about to lock in the first one there on the gold trade and get stopped out here with a nice profit. So, okay, we're flat there. I'm going to let this happen so I can go back to teaching. So, are we having fun yet? You're amazed at how relaxed I am. You're relaxed when it's automatic. You know, I don't have to think about it. I'm not like stressing about it. I'm just having fun. I'm playing a video game for money. Okay, then we're about to get filled here, and we'll get one more. Okay, so we just made $275.40, ladies and gentlemen, all with one lots. And I do not think we had any significant risk. I think over here on the gold trade, we were down about 4 or 5 ticks on a 2 lot. So, you know, what, 80 bucks. Okay. So that's it. Any questions? That's the end of the webinar. I'm kidding. Okay, let's go look and see those trades for just a second here. Oh shit, it's gonna block that window too. God, Zoom. Oh wait, maybe it won't. Oh, here we go. Okay, hold on. Give me a second here. I'm going to show you the actual P&Ls on the trades here. I just wanted to clear off all the other accounts and whatnot so it wouldn't be confusing. Okay, so that's what we just did. And so yeah, that's our max drawdown right there, I think is 53.70. So there it is, real time. Okay, so now let's go back and talk about what we did. I'm also reading your comments because I want to see if there was any questions in here. You'd add due to correlation on DOM and charts. I don't know when you asked that, Kawika, but I think in terms of the NQ trade, I would just add because it was going my way and it was still doing what I expected. In other words, I sold it short with the idea that after this move, there would at least be an attempt to take profits, and there was, but it got bought. So that's over. Now it's a whole different ball game. We have established value up here, and it's a different trade. Okay, that one ended. So it's very important to make sure you think in price action like that, and not in price points. Like, you know, I don't care that this is 82.80 or 82.50 or any other number. I've told you if you really want to get good at this, take the prices off. Just, you know, make black on black so you can't see the actual numbers. You'll get much better at trading because the prices don't matter. Same thing on the DOMs. So I think to answer your question, you know, the trade, I enter any trade with the idea that if it's going to work, people have to come in behind me. So if I'm short, I want to see sellers coming in, and I was seeing that. So as long as it's doing what I expected and it's accelerating into that, then that's the kind of trade you add into. And then a lot of times you get that ebb and flow, you know, which is why the tick chart is so handy. And that's kind of your clues as to where you enter and exit. And sometimes you're scaling. So, you know, you might be doing, you know, you might have a 4 lot on and be taking one off and putting one on as it goes back and forth. which is actually a really good segue into more conversation about the range trade. So let's go over here and look at gold. All right, this is the value area up here. In other words, the 70% of the volume is between here and here, the shaded area in gold color. That's the VWAP, the value added average, excuse me, the volume weighted average. And this is the POC, the highest volume point. Everybody makes too much importance about POCs because there's other levels that are really close, like this one. It's only 200 off of that. So as far as I'm concerned, it's just as significant as the POC. So, if you're a volume profile, market profile guy, again, all the stuff you read, put it on the back burner for now and just kind of pay attention to how I'm using it. It doesn't mean what is wrong or it won't be useful, but I'm showing you a methodology for reading price action that in and of itself can be used to trade. I mean, the DOM is literally all you need. We've discussed these tick charts and linear regression channels. Go back and watch the webinars if you haven't yet as to what I'm talking about. That's a way of learning how to see ranges. And the same thing on this time chart of 20 seconds. I can see, a linear regression calculation on this price action's range. But again, it's a mathematical calculation. It doesn't really mean what traders will or won't do. It just means based on what they've been doing, what we could expect. It's statistics. That's all it is. So you don't want to get married to it, but you want to kind of constantly have it be on the forefront of your mind. What does that mean? Well, let's go back to the idea of the process. This idea of resetting your brain. I go through this process. We've talked a lot about it. What we're doing right now is basically we have a low risk idea. We're looking for inflection points on the ranges, hopefully on the volume profile, hopefully at asymmetric points like we just saw. And once we're looking for that, then we're just on the lookout. That's why the trading itself is not stressful. We see it, we take action, we monitor the trade, we take profits, we debrief, we reset, we go back and do it again. And since we're moving around among a couple of different setups here, when I was getting into that short at the top, that was HMOMO. And if you remember from that webinar, HMOMO, even within a range, even within a high volume reversal, even with an open 5, these are not individually exclusive. You can have 3 of them at the same time. But if you ever have HMOMO, then the only rule that matters is get the trade on and get a stop between your entry and the current price. That's the only thing you want to do. Not seeing the chart. We're not looking at a chart. Hold on. What are you guys? Okay, are you guys back on my main screen or are you not anything at all? Yes, okay. Not seeing the chart. Okay, I'm not sure what that was about. The GC chart. We're not talking about GC. We're talking about, that was the DOM we were talking about over here. You were at the end, okay. Hang on, I'm gonna stop sharing again for a second just so I can get my windows back to where they're supposed to be. Because one of the ones that's missing in action right now is the gold. There it is, okay. No, it's oil that's missing, hold on. There it is, okay. Hang on, I will put my share back up in a second. This platform is not as smooth as it could be with multiple monitors. It handles it, but it's not particularly good at it. Okay. For some reason, I think I've mentioned this before a bunch of times, for some reason the webinar software and the meeting software are different, and this software doesn't do it as well. Okay, the process page and the okay, so anyway, going back to this is what I was talking about when that came up. I was talking about here, and so the thing I'm introducing tonight is the range, but again, we had an edge. We just talked about that. You should be able to see this right here, right? You guys are on my main screen? Yes? Anybody? Yes, okay. So this was an edge and it was right after a really high volume move. So your natural instinct to that should be to start looking to be able to fade it. And that's what we did. But remember, every time I entered that trade, the only thing I was concerned with was getting a stop between me and my entry and keeping it profitable, because you just don't know what's going to happen. You know, that could turn around and go right back down to wherever it came from, or it could bust right back up. So the most volatile setup is the one you use to manage the trade, okay? This is a really important point. So HMOMO always supersedes anything because it's the simplest, and your only objective is to protect your profit. Whereas, you know, edge trades and high volume reversals and all these other ones that are more weight mode have a lot of other criteria that you're looking at. HMOMO supersedes everything. Okay, now, having said that, ranges. You can see the range on the domes. I put it up on charts to explain it a little better for those of you that haven't adapted to your domes. But the gold is a really good example because we can see the range real easily. I still have that order sitting down there. I'm hoping we might get filled just for fun. And then let me bring over the 5 minute so you guys can see. Oh, it's messing with me again. Okay, here's the 5 minute. So you guys can get an idea what I'm talking about. So this is the entire range here of the overnight, but you can see most of the volume is still up here at the top, which is this area right here. So basically that's a high volume node, and that was the trade that I was just doing. We were at an edge and I was getting long with the idea simply that it was just going to revert back to filling in this profile. Gold does this almost every night. You just have to kind of be cautious about where you enter and not scale too much. The mistake I have made with this trade is to get too ambitious with the edge of a range. Like, you know, let's say it came down here to 71, 3, 4, you know, and it looked like a good long entry, or even down here where I am, there's some people thinking like that. You can see this set of orders here, which may or may not be real, but probably is down there. Same thing up here. Those guys are probably legitimately looking to buy and sell. But the problem with that is if the range breaks down, you can really get crushed. And you'll see some examples of that. Let's see if I can find one. Yeah, I have to go back to more days. So hold on, let's just get some more days on this chart. And I know there was one just before the weekend because I had it running in a sim and it got crushed. So, okay, let's see. It was, it's always a play on the range of the day. So that's always a good example. Okay, that low 65, no, it wasn't that one. Yeah, here it is. It was this one right here. Okay, I guess I did have it up. So, you know, if you look at, in fact, I even think I talked about this in the Slack. If you look at the lows here of the ranges for, you know, both the overnight, this regular session, this overnight, this regular session, and the overnight up until right here, this looked like it was a really good place to get long. And in fact, I did that. But then not only did we lose that edge, but it bounced and then it lost it again. And I was experimenting with size and gold here in a sim. I wasn't doing it in my live account, thank God. But anyway, you know, it got really crushed. I mean, 10 points in gold is a lot. And then look what it did. You know, once they flushed all those guys out, it reversed and came right back up to that same range it's been in for all those days. And this is what gold does. So the moral of the story here is every instrument's different, but here's a really good example of how to play range. Range generally will stay established over periods of time until it doesn't. But even if it breaks ranges like that, you will frequently see, and this is clearly a high volume reversal here, that's what they look like, and it moved right back up into the range, in fact, you know, the high end of it. So couple of concepts here just to kind of summarize for a minute about this idea of range trades. And again, you know, this session tonight is about gold, it's about oil, it's about trading ranges and high momentum in the indexes if that's what you get, which sometimes you do, sometimes you don't. But let's talk about it. Okay, number one, go back to process. If you're trading overnight, so this is an overnight filter for these setups. That's what the structure of this box is. Extremes or ranges, less size, watch out for Asia news. So those are all the considerations I have on this. So if you're trading overnight, you want to look for extremes. What's an extreme? That's an extreme. We have a sudden radical move for no reason, or whatever the reason is, doesn't matter, and you want to look to fade those. So that is an example of extremes. Okay, less size. I just gave you a personal example of that. I tried to put a lot of size on playing the ranges. Every now and then you get smothered doing that, and you will lose a lot because it will break down as it did on that chart I had up a second ago, which disappeared again, so I apologize. Oh wait, no, I moved it. Oh, I'm getting more organized. It's over here. So gold will do that, and it will break out of a range, but it will frequently then revert back up into it. You just have to be nimble and don't have a bias. Order flow always trumps or overrides everything. And that is, again, a process concept, right? You see it everywhere. Order flow overrides everything with order flow only. Order flow beats range. So what are the two major criteria I have in the notes? Irregardless of whether you're playing a range overnight or not, you always have to understand exactly what the range is that you are in fact playing. You can't kind of let it define itself as you trade it. That's a great way to get beat up with a big trade, because what you're going to do is you're going to add to a loser and it's just going to keep losing. But if you define a range that's reasonable and you watch the order flow, then you will be likely to see things like that little move in gold that I caught. You know, it started to push the edge of the range. I saw this high volume node forming, and we had this one and this one already above us. So again, it was asymmetric. It was logical as well to believe that I was more likely to go this way, and once I got in there, as long as it didn't break down, I could probably add to it. Now, for my personal overnight kind of risk management, I will put up to 4 on within a defined range. So this one I have down here and those others you saw me putting on, I would have added to that trade all the way down in here. And then, you know, if it just totally broke down, I'd get out. But, you know, the order flow suggests that it would have done what it's doing now, and it probably would have reverted up there. So that's why the order flow is always the most important thing, but range is what you're playing. Now, oil gives us really defined ranges, but its personality is totally different. Instead of kind of always reverting back to some sort of, you know, agreed upon value or balance, as it would be called in market profile or volume profile, you know, anywhere here in the middle of this would be considered that, because it's statistically in the middle, and, you know, a standard deviation this way and a standard deviation this way, and the volume pretty much says this is normal behavior. But over here on oil, what will happen is it'll get to the edge and it will blast over it and go 20, 30, 40 ticks and then come back. And so again, very different, totally different personality. Do not play this in the nighttime unless you are a skilled order flow trader, but it can be lucrative if you can get the hang of it. So let's talk one more thing about doing gold and oil versus doing equity indexes. I've mentioned this a bunch of times, but it's particularly pertinent within the construct of this. What are the filters involved here? Again, overnight, you really want to work at the extremes of the ranges. Being in the middle is dangerous because of what I'm about to tell you. Number 2, you have to work with less size. You know, if you're a 20 lot trader during the day, be a 4 lot trader at night. A good example of that, watch out for news, because, you know, in Asia it's daytime and those guys, you know, stuff's hitting the tape. What do I mean about, well, there's 2 things I want to explain. Okay, let's back up just a second. Okay, extremes or ranges, less size, watching out for what? Okay. One of the things I've said to you guys a couple of times in other contexts, but in this one it's really critical. An index like, you know, NQ or ES, that represents a derivative of a derivative. By definition, that gives you some distance between you and the things that are truly getting priced. So do I trade? I'm going to come back and answer that in a minute. Those last 2 questions. So for something to impact the futures market at night, think about this for a second, okay? And you always got to learn to think about, you know, what is actually going on? You know, what's the reality of the trading that's happening? Forget indicators and, you know, all that other garbage. What's literally happening, okay?
In trading the ES or the NQ, we are trading a futures contract that is derived from an index, okay, whether it's the NASDAQ 100 or it's the S&P 500. But that index, guys, is itself a derivative. It's a derivative of, in the case of the S&P 500 stocks. Well, guess what? All 500 of them are not trading right now. Zero, none of them are trading right now. So anything that happens here has to be constantly priced against what those values of those actual instruments are that this is a derivative of a derivative of. Because of that, you're seeing an interpretation of what value will be tomorrow morning when we open up, okay? And we actually see the equities that we're deriving value from 2 times removed, okay? Oil and gold, completely different ballgame. This oil contract is literally a contract for X number of barrels of oil. If a contract comes to delivery on the S&P 500, it's settled in dollars. I get X amount of dollars per contract. If it's settled, if I let a gold or an oil contract actually fill, you know, I take delivery, a guy shows up with a truck and a bunch of barrels of oil in my front yard, or he's got a bunch of bars of gold or bullion. I mean, so literally there is a thing there. There's a true commodity. And again, I've explained this before, but it's really important to understand this in the context of whatever we are doing as speculators. Let's say you are the risk management desk for fuel costs at American Airlines. Okay? What that means is you have to predict and protect yourself from spikes in the oil prices or possibly profiting from drops in oil prices, and at the same time have enough fuel for the Christmas holiday rush. So that's your mission. Now, when you're buying literally millions and millions of barrels to fuel all of your airplanes, does it matter if you're buying at 57 or 59? No, it doesn't. To you, that's the same. What you're protecting yourself against is 49 or 39 or the other way, 150 or 99. You know, if you're, for example, if you're buying fuel and there's a war in the Middle East that breaks out Monday, oil could go to 150 overnight. If you're not hedged and you need to buy a lot of oil, you will go bankrupt. So that guy's job is to do nothing but that. So you and me coming in here trying to make 10 ticks or 20 ticks or 30 ticks in oil, whatever it is, or the same thing over here in gold, we're not even a rounding error to that guy. Or to the Chinese government that's buying, you know, 1,000 tons of gold to stick in a vault somewhere. 72, you know, 1472 and 1500 are the same price to them. But to you and me, you know, that's enough to break your account. So it's really important to understand when you're trading at night that you're seeing the interpretation of pricing in the indexes, because being 2 derivatives away, we really don't know what's going to happen. The market's trying to price it, and that's the opportunity. Whenever you see price discovery going on, if you're good at trading order flow, you just ride the price discovery like we saw at the FOMC today after the minutes came out. Literally, all you had to do was jump whichever way it was going and run with it until it stopped. A good scalper can literally do that all day long, and you know, not 1 lot. You could do it with 10 lots, 100 lots in the ES if you are capitalized well enough to handle that risk. So that's the point here, guys. Really important to understand the context, both that it's overnight and it's thinner volume, and that Asia is a different thing and the Middle East is a different thing, and their motives are different than yours, and so are American Airlines, and so is the guy buying bullion, and all those are factors that are going to bounce the price around. Do you need to concern yourself with how or why or what is moving? Notice how I haven't looked at the news at all. I don't care. The news is irrelevant. All I care about is the result of the news, and that's real time in the price. We're watching it. So that's, by the way, why domes are so good, because prices go up and down. Prices don't go sideways. This is a model of the actual action we're seeing. It's a representation of what happened for those of us that weren't staring at it over here. And so, you know, really, you should be trying to learn to read domes, because ultimately that's the skill. And you'll execute much faster if you can do that, as you saw me doing, because I'm just watching the tape and I'm saying, okay, that's a spot I want to sell. That's a spot I want to buy. It's still going in my favor. Let's try to add to it. Over here in the gold trade, okay, that range trade was still working, so we're not going to worry about it. Why sweat a few ticks when the premise is still working and the idea, I may use, 2, 4, 6, as long as it's working. When it stops working, you get out, you reset, and you start thinking over, I guess I had that wrong. So that is why it's not stressful, because it's that simple. Somebody posted that they were having a lot of fun learning to do the one tick drill, and a couple of us jumped on him. Lee did and I did jokingly, but seriously, that the idea is it shouldn't be fun. It should be boring. My mentors have told me that since I was a child. Good trading is boring. You just execute. And yeah, it's kind of fun because you make money, but you don't have the kind of elation when you have a winner, and you don't feel crappy when you have a loser. That's what you have to train yourself out of, because that'll always steer you the wrong way. You can't be an emotional human being. You just have to be kind of robotic. Remember the word that I used? Does anybody remember the word I used for that? In the last webinar, I said there was something on my desk that not stoic, but you're close. I said, make it, and then there were 4 words. No, not that's this. Here's where boring doesn't apply, Dr. Shaw. I said, make it fun, and I said, make it balanced. Do you remember this? And I was talking about something very specific. Exactly. Ernest just nailed the word I was looking for. And then I said to make it loose. In other words, not stressful and tight, and to make it mech, as in the coding word for mechanical. Mechanical in the sense that you're responding to something that you've already programmed yourself to respond to, like shorting sudden moves to an edge, or fading them is a better word, because if it was a drop, I'd be buying it. So shorting, not shorting, but fading, doing the opposite of. Okay, I saw some questions here. Let's go back to them. I've heard currencies including gold and silver are what? I've heard currencies ... I don't know what the rest of the question was. Oh, okay, I see it. Okay, what are the best ways to define the range? We're going to do that in a second. Jerry, Amy, follow fib levels. Again, I don't use any indicators. So, if you want to put fibs on your charts, go for it. But the only advantage I see to any indicators is like fibs and moving averages and MACD and, yada, yada, I name it. It doesn't matter. Any indicator. The only advantage I see to using any of those is that you can see places where people that use that indicator will be trading. So for example, if you're using fibs, yeah, there may be a lot of people using fibs. In gold, I've heard that too. I know they do it in oil, but I know they get burned a lot because oil overruns level boundaries all the time. It loves to just plow right through them, as there's a big trade going on, and then plow right back the other way. And, that's why oil is so much fun. But my point is, again, Amy, we're order flow traders. So instead of putting a fib on a chart and saying, boy, if it gets to that fib, it might be an inflection point, I just watch the tape and I'll see an inflection point like the one that I was shorting up there. And I said, see, now I can move my stop and protect it because there were traders coming in below me selling harder than I had been. Well, to me, it just defined an inflection point. Now, yeah, if I go back and look at the chart, I'll probably see that that was a fib or a pivot or an EMA or the MACD crossed over or yada, 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 nonsense, furu. Most of you have spent money on classes that teach you techniques using indicators. And most of you now understand that that is just simply not a way to make money in the market. Indicators are static ways of measuring, numbers. And ultimately, you want to just learn to read the numbers. That's the skill. And any tool that you can use that helps you do that isn't necessarily bad. But for our purposes, I think you would find it distracting. So that's my long answer, Amy. It adds to your, again, anything that can help you learn how to read domes is fine. I showed you this LRC technique because that's what I used, and I have taught other people that technique, and I threw this one up again for you guys. This is the one I was talking about where if you're looking for bigger plays, put those same 2 intervals of LRCs on the 20-second chart and you'll see much bigger plays. but they're basically the same idea as you're seeing on the tick chart. You're just seeing, two of them instead of, 5 of them. And that's fine. Again, this is part of the finding your Bubba. My Bubba is ultimately on the dome, but, it took me a while to get there. I've told you all, I played with order flow for a good 3 years before I started to get a sense of the dome where, I really felt like I could just turn my charts off. And I even did that. And I'll tell you again, over and over, the way I learned to do it, I took the prices off the domes and I took them off the charts. So instead of seeing 71 quarter here, I just had black on black and I could see that there was a level there, but I learned to not concern myself with the price level, but to concern myself with the action or the range that was being built. With that answer, I will go to Jerry's question about how is the best way to define a range, and Samar's question, trading ranges by limit orders, no. That's the same answer I have for every question where do you use limit orders or market orders? The answer is always the same. I generally will enter when I'm sitting on a spot with a limit order like this, but if I'm just grabbing momentum or order flow or open 5 or anything else, I will hit it with a market order, and it's a very simple reason. Every time you try to use a limit order to enter something that is about to happen, which remember, that's what we're doing. Order flow is showing you momentum that is building, and it typically pops very aggressively. I guarantee you, and I guarantee you particularly at this stage of your education, that you will be the guy sitting there on a limit order at 71.25 when it doesn't touch it and it pops to 79.25 in an instant. Whereas if you had taken your same instinct and just hit a market buy, you'd be in the trade. That's why. You're trying to save a tick. And that's daft. For those of you that know British English, Google daft. It's foolish. You're running a business. It's the same argument I have with these clowns that, I just had it on Twitter with some new guy with 80 followers who's telling me all this stuff about market profile. He kept using the term fair value. Trades always refer to fair value. He has no idea what he's talking about, but it sounds good. And there's like 300 people, saying, yeah, good call, and all that crap. Anyway, the point is, forget all that stuff. None of that matters. And the more you burn into your brain that the only thing that matters is the tape, the better you will be at this. Don't use terms, absorption, all that crap. Yeah, it might be right. Yeah, it might matter, but we're here to learn price action. Okay, so let's go back to, so the mech part of this is the way to keep it from being stressful. But Dr. Shah was correct as well. My mentors have burned this into me, and this is the art of it. I keep using that term, but, well, wait a minute. How can something be boring and fun at the same time? It's boring because I automatically know what to do, but it's fun because I sit here and make $1,000 an hour, which is pretty fun. But it isn't the $1,000 an hour that's fun. It's the fact that I can do it so simply and comfortably and loose. And remember, the balanced one actually has some subsets. The balance is between trading live, trading sim, doing drills like the one tick drill, and testing out new setups. So, if I'm burning out in my, like this morning, $1,500 doing 77 scalps in 90 minutes, that's tiring, particularly when you're 59. So I go and I run, some tests in a STEM account on some other idea that I've got or whatever. So that's what the balance part means. Okay. Oh, here we go again with the how often do I reset my dome? Okay, a lot of people have asked that, Bar, and the answer, again, is whenever it's important or appropriate to reset it. So one of the things that resetting it allows me to do is to see little custom footprints. Like right now, I'm just going to reset the current trades, and I'm going to let the total trades accumulate here. And so I'm answering Koika's question too, and Jerry's question. How do I define ranges? I let one create itself. So right now, we have a real high volume node over here on the ES. Let's put this in context. Where is that? It's smack dab in the middle of a double distribution. This is a really dangerous setup, particularly overnight. So I can tell you right now, there's just nothing I'm interested in anymore here. But it is building up a really nice range. So where might I be interested? Up here, 31.10 and below, particularly on a sharp move like that. And the same story down here on the low that it's already bounced off of, 30.90-ish. So if you look at the DOM, you know, that's the kind of thing where, all right, that makes a lot of sense. It's the fringe of the range again. It gives me asymmetric trading. You know, risk is real easy to see. Gives me a potential scaling into that trade. So that makes a lot of sense, but I'm just not interested at all here. So I kind of reset whenever I want to start defining a new range for myself. That's the answer to your question. So for example, over here in gold, we're seeing something similar. Remember, this was the bulge that I had been watching, and we're getting a double D here too. So any entrance into this low volume node here should imply that we'd get back up here, and that's why this guy's up here thinking he's going to sell that. So that would be one way to right now define this range setup for gold. I'm going to sell up here, I'm going to buy down here, I'm not going to do anything in the middle, and you know, that's a range. So the answer is it's not mechanical, Sommer. It's not something I can just say, well, ranges are defined as blah, blah, blah. You let ranges kind of build themselves for you is the correct answer. And so that's why we have these tick charts that are showing the ranges that the LRCs define. And again, just to review that, a linear regression channel is just a statistical measurement of all the price points in this range and what the range is. One standard deviation that way, another standard deviation that way, and then another two this way. So it literally is a statistical, if you look at the volume profile or the market profile or the old bell-shaped curve, literally, I am building bell-shaped curves in real time. So that's the answer to your question. And the reason we have a faster one inside of that is it's building its own little bell-shaped curve. So if you take that logic out and look at it as these things are developing, you're getting constant ranges building for you. And so the answer is to redefine them on the DOMs whenever you really want to zoom in and watch the action. So, you know, the characteristic of Jigsaw is that it's going to reset all the currents on each new touch of that price point. But sometimes I don't want to see that. I want to see all the new touches. So right now it's going to refresh those, but it's not giving me the sense of movement that I want to see. But if I do that, I can instantly see the sense of movement. We have an inflection point right here and buying below it. So if it manages to get above this area, it probably is good for this edge here, and then people are probably going to try to sell it. So that is my interpretation right now of the real-time range. And again, if you just compare, you know, so I'm looking at 76, and that's what, 74, 75. So that guy or group of guys is trying to fade that turn right there. They're betting on that turn holding, and I'd probably agree with them. It's getting close to the edge of the range, and you know, depending on what the order flow was when we got there. So that's the answer to all of your questions about when I reset and you know what is a range. It's whatever you define it to be at any particular time. Now, you know, we have a bunch of really specific versions of that we use. The Open 5 is a range. That's this right here. But it's particularly important because of the way that it is affected by institutional trading. And if you don't know what I mean when I say that, go back and watch the Opening 5 webinar that's explained in depth. So we don't have an Open 5 type of event at night because there aren't 5 minutes where literally every large trader on the planet is starting to trade. You know, at night we have a lot of ebbing and flowing, and you know, Asia opens and you know, the United States goes to bed and Europe opens and the Middle East is kind of in the middle, and you know, blah, 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 blah. So you have to constantly establish the idea of ranges within the context of the instrument and then, you know, time of day and whatnot. So on gold here, there's a really nice little bell-shaped curve right there. And there's another one up here. And we're dead on the middle of that one. So, you know, that's about as balanced as you can get. So if you watch the tape going by over here, you know, unless you saw, this is what I call rainbow tape, you know, or it's like a rainbow flop if you play poker. It's meaningless because it's going both directions. But, you know, if this started getting really one-sided, you know, a bunch of buyers or a bunch of sellers and just, you know, started pushing one way, you know, that'll catch my attention. Okay, there was a couple other questions I wanted to try to So basically the chart is a derivative of the dome. Yeah, you know what, John, that's a really good way to point to say it. Charts are models. If you use the mathematical or the scientific definition of a model, prices don't go sideways. That's why charts to order flow traders generally don't make sense, because we're not going side to side. If you ask yourself the very simple question, if you're trading the NQ or the ES or anything else, can it go sideways? No, it either has to go up or down. Going sideways means it's literally not trading, which is never true. It's always going up or down. It's just a question of how much energy it has in doing it. So seeing sideways on a chart doesn't really tell you anything at all, but seeing sideways on a dome tells you a lot, because it's really not sideways. We're seeing, look at all these little one lot nibblers in here. Basically everybody is doing the same thing I'm doing. Nobody's going to take a position unless there's asymmetric risk and reward. So you're seeing the negotiation. You're literally seeing the auction. And that's why, I say over and over, guys, if you really want to get the sense of this in your head, what you should be saying is, okay, it's an auction. It's like, when you're at Sotheby's and, they're auctioning a Van Gogh, do I hear 10 million? I have 10 million. Do I hear 11 million? That's literally what's happening. So, if you keep that in mind, the dome will make a lot more sense, and you'll get a lot better at understanding how to trade it. Okay, let's see. Yeah, I'm daft all the time too, Amy. Daft is just learn when to adapt your daftness to process. Okay, it's very hard to let go. Okay, Kalika, am I correct on gold you front run limit orders so they're at an edge in a bunch of orders? No, I'm not front running anybody. I'm just making the same evaluations that they are. So why did I put my order a tick before him? For the same reason that I use market orders. I'm not trying to front run him. I'm just seeing the calculus he's using to think short there, and I agree with him. So it's a really good spot to just get in line. Like right now, I've already got 2 spots. There are 29 trades here. I'm 27. So just by throwing that order up there, I got in the queue. I may cancel it. You've seen me do that too. I may put one on in a different spot. I'm not committing to that. I'm just getting in line. That's all. Same story down here. There's 22, and I'm number 12. There's a lot of times when it taps your price, trades once, and you're number 8, and you're like, God damn it. It'll happen all the time. So, getting in line and getting to the front of the queue never hurts. You can always cancel your orders. Okay. Can ranges be used using LRCs and can be used to trade the middle of the volume profile? Yeah. The correct answer to your question, Jerry, is go check out Lee's stuff. We have the emoji channel in our Slack. Lee's profile stuff is a different, it's not wrong or right. It's another approach. A lot of people look for trades from the middle out. Like instead of thinking that we're balanced here, they would look for a departure from here to gain energy. And that's kind of Lee's approach to the volume profile and market profile for several reasons, but he uses TPOs and I use volume profiles. So those tend to be more time oriented and you can do that a little bit better. So again, without getting into excruciating detail, they're both possibly right, but don't think too much. You guys all tend to try to find more, like I'll say, okay, so here's a great way to trade the edge toward the middle. And then you guys are always saying, but what about the middle toward the edge? You know what? Yes, it's a potential setup, but I've had better results with this one, and purpose of this workshop is to see the results of all of my live tests over 20,000 trades or whatever. So again, I would encourage you to think that way, but I would encourage you to do it in February, not in November. Okay, Darren, is there a price point where you expect the pull of the upper range in gold to bring it back? No, again, there isn't a necessary price point. It's just, I look at stuff like this, and I've only been trading gold really actively for about 9 months. This is a relatively new setup in my library. The other things, the other instruments, and the stuff I do in the indexes, I've literally done for, in some cases, 30 years, 40 years. You know, I used to trade OEX options against the big SP contract in 1980. You know, so what is that? You know, 40 years ago or whatever. So this one is relatively new, and basically the way I would tell you to play this until I can be more explicit is that the ranges, it stays in the ranges until it breaks out of them. And then when it does, I leave it alone until I see an HMOMO back to the range that it has been playing. And that range typically, if you're looking at it on the value area, you know, on the dome, that range typically will be the range of the dome. So, you know, if I let this play out overnight and it extends down into this area down here, it will still tend to pull up back into the range toward the end of the night going into regular trading hours, you know, in New York. So, and again, I don't try to explain why that is. It just does it, you know, like here it is doing it, you know, all these other days. And so, you know, finding good bubbas, you know, finding good setups is really about using your order flow techniques to read price action at places where there's a repeatable setup. Remember the setups webinar, you know, the two most important things were that they occur frequently, like multiple times a day. That's number one criteria for setup. And number two, that it's gameable, you know, that you can assign risk and reward really easily without, you know, some ludicrous formula that I'm going to use a 3-tick stop and a 9-tick target. Again, those of you that are new, you're going to hear me use the word nonsense a lot. That's nonsense. It is impossible to trade professionally for any length of time using fixed stops. So again, that's Furu, you know, the fake gurus. They're all over Twitter. Oh yeah, I use a 3-tick stop and a 7-tick target, and nonsense. That will work on one setup under one set of market conditions on one given day. But the vast majority of professional traders are discretionary. There we just had an order flow event. Okay, that's a really good example. We just had somebody trade 30 lot, and then there's 8 more, and they were on the buy side of this point right here. It is an edge of that profile. So this is a point where you instantly want to pay attention. So those 2 little blocks caught my eye. That's why I have that tape running there. Okay, so this is what's going on. And what that is telling us is we're teasing this edge. And remember what I said, this low volume node, we're likely to blow right through it if we get to it. And that's why he's up there and I'm up there, but this is probably a better long. So for now, let's just see if we can catch a couple of ticks scalping it. But I'm making 2 points here. Number one, this is about to be an edge Momo breakout or not, but I'd say the odds are pretty good looking at the order flow here. This would be a good place to reset just the currents. So net delta is positive 18. So we'll be able to get a kind of real-time delta. And, you know, I might move this exit up, you know, let's say I want to get 2 ticks. That's 20 bucks. Remember the term that I use for scalping? Most of you have been repeating it. You know, good scalping is like picking up $20 bills or $50 bills or $100 bills, depending on your size. You never want to overcommit to your bias. And right now, this still looks good. The buyers are still coming in behind me. You know, I'm negative the spread, which is the least that could happen and will happen all the time. Would I add to this trade? Yeah, if it pulled back a couple of ticks and a bunch of buyers jumped in, I'd probably add to it. But this is a really good way to play the 1-tick drill. Just move that down there. And no stop. Okay, now it's a parity again, the trade. So we get that 1 tick. There's 39 contracts up there. We're last in line. But what you will frequently see when it breaks an edge is they'll take them out all at once. Just we'll go right through there and we'll bounce up a couple ticks. They'll run some stops on the guys that are shorting it, and that'll be that. So this may or may not be a good trade here, but this 1 ticker is a really good example of how to do the 1-tick drill. And you know, you don't have to do it for 1 contract and you don't have to do it for 1 tick. It's a concept. So, you know, here I might add 1 there and get out of them both there, you know. The idea is learning to just read order flow in the very, very, very short term. So again, this is still moving up. It's tripled since I last looked at it. It was 12, now it's 25, 26. I'm still getting an attempt to lift. That's what I want to see. I don't want to see them dropping the bid. I want to see any attempt to drop the bid get bought and the ask get lifted. That's what we're doing here. So let's stay with this for a second. This will be fun. Notice how I'm not resetting this because this is the range I want it to define. Okay, there's an attempt to lower the bid. Let's see if it works. Do the sellers come in, or do people say, nah, we're going to buy that? A lot of little guys, really hard to interpret this. We don't know what's going on. This could be one big guy. Okay, see, that attempt to lower the bid failed. It was pulled back up. And again, look at that, 2 big blocks that are bigger than this. So this attempt failed. That would have been a really good spot to jump on another contract. Again, get out of them both here. But okay, there we go. And now we're first in line. And remember I said it does it in big chunks. We filled, what, 30 contracts right there. That's why I'm number 1. This is the most frustrating thing. If that happens and it reverses and drops straight down, and that will happen, guys. Just, you know, it's the game. But I'd say the odds here are 99% that we are going to get filled for a 1-tick winner. But you never know. Okay, I'm going to just let that run and keep answering questions, and we'll see what happens. So let's see. Good aha moment, Trader PD. See, getting out of bed at 4 in the morning was worth it. Okay, thank you, Jason. No, this isn't the kind of stuff you see in the Jigsaw videos because Pete is appealing to a little bit different audience than I am. He has a lot of prop traders, but he also has a lot of people coming from Furu-dom. And okay, God, look at that. This is perfect. Now we're at 64. So this is probably going to do a big pop. And again, I really just want to demonstrate the 1-tick. So let's cancel that guy because I don't know if it's a good idea or not, but you know, periodically wiping those out is a really good way to keep an eye on their attempt to drop the bid, because the only thing that can hurt me here is dropping the bid, and that is not happening. Every attempt to pull down the bid has gotten more than that attempt on the ask side. Again, come right back at it. Yeah, my tapes are Jigsaw tapes and the colors are reversed, and I'm not going to go into depth explaining them. If you're not using the Jigsaw tools, then you won't understand my tapes at all, because they'll be completely different from anything in, you know, any traditional trading platform. I've mentioned that before. They're reversed. You know, they're split back, and a traditional platform will tell you that these are buys and these are sells, but it's the opposite that's true. So I won't give you any more detail on that for now. It's just too much. Go look at the Jigsaw stuff and you'll get a hang of it. Okay, this would be a good spot to see if we can maybe get another one. We probably won't get filled, I'm guessing, but you know, I could even hit the bid right here and take that one. Look, just for fun. Let's see if, okay, we got filled there. So this is how you scale into a range trade. You know, as long as this big node here holds, I'm not taking any substantial risk, because, you know, how much could I possibly lose, right? I mean, we're talking about ticks. So here, give me a second. I'll switch this to that account and we can watch the trade real time. Okay, so, you know, it's a whole $13 loser now, and I've averaged in a little bit. So now this guy is going to be a better winner, and if we get them both, it'll be even that much better again. So I may not want this one, but I'm in such a good place in line. I'm 8 out of 32 that I'll take it just because of that. And if, you know, just turn right around and sell that one immediately. So this is a really good example. We got lucky tonight. It's a really good example of how I defined a range. So I've answered that question. And then how I scale it. So this is a perfect example. These are 1 lots. You know, we've got 2 on now, but literally, I mean, our risk is virtually nothing, because the worst thing that could happen is we get filled here, so then we're long 3, and it just goes against us like by crazy. But, you know, the odds are not likely that that's going to happen. All right, now we even get a better fill because it dropped our average. So this one, we'll scalp out our first one at a tiny loss and make the next 2 real big winners. So we could even turn around and do this if we want to really protect our risk. And remember, I've told you guys over and over again that once you're in a trade, the only thing you should be thinking about is protecting yourself from risk. Nothing else matters. So the only thing I'm concerned about here is this downside. And okay, we just got out of the first one. So now this one is profitable even here, you know, at this 1 tick. So I could go down and grab it, or I could take another one off there if I wanted to. A lot of ways I could play it, but let's see if we can get out of both of them at the next tick. I'm going to cancel this one just to clean up. And okay, so this is break even. That's profitable. That's more profitable. Again, the delta is still going up, so the trade is still doing the premise that I entered it for. Now, you know, I might want to get out of one here instead of up there. There's a lot of ways I could manage it, or take one off and give it a little more room. That's not the point of this exercise. The point is to show you how to define a range and then trade it by scaling in and out of it. And I also don't want to go too long. What are we at here? We started at what, 6? Now we're okay. It's an hour and 20. This isn't scaring me. Again, I'm still interested in adding to it because I already scaled out once. So that number is still going up. Again, the key that I do not want to see happen is them successfully dropping the bid. The opposite is happening. They are continually lifting the ask instead. Every bid drop gets lifted. And so this continues to be a good trade. And, you know, we're risking nothing. The LRCs are defining the range. You know, if it breaks down below here, we're probably wrong. You know, so again, that's real easy because that's the other side of this bulge in the profile. So might even add to it down there, depending on what the tape's telling me. Right now, the tape is still telling me the same thing, that every big block has been on the buy side. Remember the meters? What those guys are doing is 1 minute and 4 or 5 minutes of consolidation. So they're kind of telling me the same thing that this delta total is, that we're moving up and we have a little more energy on the real time right now, but 5 minute is consistent with that. So, you know, this is still working. If I wanted to protect risk a little better, I could put one sell here and cancel one of the ones up there, you know, so I'd protect myself even better. But again, at nighttime, as long as you don't get just massively on the wrong side of the trade, as long as you're doing this as I've been describing and watching the total delta and going in the direction of that, there's 3 or 4 good strong bars. Now we're back at break even. You know, it's going to really be hard to have a loser on this trade unless I just, you know, go make an omelet or something and leave it on and don't watch it. Couple of guys are starting to get more ambitious about putting sell orders up here. You know, that built up a little bit. So, you know, if I get worried, I can always get out as soon as it ticks up here if it does. But I'm not really worried. Again, this feels pretty good. It's got energy the right direction. It's mostly selling or buying since I entered it. Okay, there we go. We got some profit again. We're up a tick. I have a feeling we're going to get filled here pretty quick, but let's see. If I was concerned, I would do this. And I literally just scalped out of it by taking the ask, because at that point, the ask was profitable. So I took less profit. That would be the kind of thing you would do if suddenly the tape went against you. You started to get worried. You know, this still has really strong buying, but you know, it's getting boring to just sit here and watch it. So anyway, you get the idea. Let me put that back. Let's see, that was gold's tick chart. Okay, let's take some more questions. On your tape, oh, I did that one again. Can I tell us, yeah, the block sizes for each instrument. I mentioned that in the session on my screen layout, but basically I use 10s as blocks on gold and I use 20s on oil. On NQ, I use 5 overnight and 10 during the night, and I put the little bar, I believe, on 20. Yeah, I mark 20 or greater there. And ES, 20 overnight and 20 or more during the day, sometimes 50 or 100. It kind of depends on what trades I'm doing. As long as all the block trades I'm seeing in the blocks here are represented down here, I won't change these two because I've got 2 sets of tapes. But for oil and gold, I only have 1 set of tapes. By the way, this perfectly. See all this selling coming in now? And these went the other way. I would have been out of this trade at this point. So the fact that I scalped out of it profitably before these guys started getting more aggressive selling, that's how you read order flow. You just get a sense, and it almost becomes your spidey sense if you're a Spider-Man guy. But there's definitely something to that. That's the art thing that I keep talking about. So, so you know, the size of those blocks and things are really a fine-tuning thing based on what you're doing in the instrument. Let's try to stay on topic here, and to some extent, everything is on topic, but in the context of setups, you know, tonight is a few things. We're talking about trading the overnights, okay? And we've talked about less size, watch for extremes, Watch out for Asia news, and just, the fact that you're really handicapping something based on incomplete information. Remember, in context, intraday, collecting info is really, really important. But we can't do that. We don't have any information. We don't know what's going on. And so we have to kind of size down because of that, which is always what you should do when that's happening. So given that, that's kind of our overnight filters and our GCCL kind of mentality. Then let's go back and look at the setup. The setup is a range setup. What's the range? It's whatever you define the range to be. At least 3 of you asked me, well, how do I define a range? I hope you understand now at least where I'm headed with that. It's whatever you want it to be. Just make sure that whatever you're trading that you've defined, you don't change your mind in the middle of your trade. That's not allowed. And that you keep in mind that you have to really keep your heartbeat and the order flow beat in sync. And if you do that and you keep these criteria of filters in mind, extremes, less size, watch out for Asia time zones, then that trade will pretty much give you all kinds of setups all night. There'll be one in oil that works one way, and then there'll be a little bulge over here in gold. Then maybe gold will start working the whole range. You'll see a sudden, it'll shoot up here and take these guys out and go up to the POC and hang out for a while, and then it'll start filling in the middle here. And hey, guess what? That's your clue. That was the big reveal that the personality was changing, that you were seeing behavior like that, where, the range is starting to fill in and get symmetrical and get bell-shaped, and the thing I love about gold is, if you look at, Google, let's see, bell-shaped curve, the one you see in class, the classic bell-shaped curve, it always looks the same in statistics or anything else. There it is. Okay. It doesn't get any more basic than that. Well, guess what? Gold is just really good at giving you those, see what I mean? And when it leaves those, here's a bunch of them together. When it leaves, like it did right here, it will do it very aggressively, define a new one. So you would be working this new range down here, and then the exit from that range is where the high risk reward goes. You pretty much have no risk as long as the trade keeps working. And that's what I was showing you was an example of that. And we had a example of that just during the day in ES today. These setups show up all the time in every instrument. And that's one of the reasons I like them, as you've heard from me over and over. You need repeatable setups that behave the same way every time. And so, here's examples of that in the ES. And today, that we saw this real time today. We had that sudden break that, some people said it was the trade deal is dead. Some people said it was, Trump clearly is impeached now. He's going to resign. Today was the nail in the coffin. And that's just a matter of, the right side learning that. So this drop was really aggressive. And, it got bought, but remember the conversation we were having in the initial down move. Remember, this is a 5-minute chart. So if you go back and look at the conversation about that, I think it was in the NQ, intraday NQ chat. It wasn't a high volume reversal because it didn't just radically reverse and go right back up. It tested this for a long time, and you could see the sellers just weren't concerned. And then as the day went on and the FOMC came out, everyone kind of forgot about that. And the FOMC became the thing. And then the kind of meme of the moment was, the economy's going to crap and the president's going to get impeached. So, we better drop interest rates. So that was running around Twitter. So, take all this crap with a grain of salt. You don't really care why. Just, learn to trade the reaction. That's really the sweet spot, is the reaction, not the news. Who cares what the news is? It'll typically be wrong anyway. Okay, would it be alarming? Ask if heavy lifting is not moving prices up. No, because of the time of day and the volume. That again goes into the kind of less size. What was more alarming to me, Summer, in that gold trade was that the reason I was in it stopped. Remember, I went in that trade with the idea that it was going to violate the edge. And I managed to get long with that premise in mind on a nibble. And then on a pullback that continued to support that premise, I added to the trade. And then I started putting boundaries on as to where I would scale out of the trade. So what I was doing was I was letting the auction tell me whether there was heavy lifting going on or not. And as soon as that behavior changed, and I started seeing, for the first time, we saw a couple of cell blocks go by. We hadn't seen that up until that point. I kind of said, all right, well, it's just losing energy. So it's not so much that, big giant sellers came in or, they stopped lifting the ask so much as it just stopped having any upside energy at all and got real balance. That's what we're seeing now. It just doesn't really want to go either direction from here. And, that's the definition of everyone agreeing on value. Remember, auctions in the market, so price changes on one condition and one condition only. And this is all you have to remember. Paste this to your forehead. Price change when traders do not agree on what current value is. And that's why you get moves like this, okay? Because the buyers suddenly felt the market was worth more than the sellers did. And that happened. And when that stopped happening, we went back down. And that's all there is to it. I mean, it's really that simple. Forget the indicators and the fibs and the pivots and all that stuff, because they won't give you the same insight. They might give you a potential inflection point. And then guess what? To confirm whether that's an actual inflection point, you got to go look at the tape anyway. So you might as well just go look at the tape. See, there's a really good example of a balanced tape, a rainbow tape. Remember I said that a minute ago? Rainbow, because it's green and, it's just all the colors of the rainbow. It's not in any one direction, whereas, oil right now is a lot less rainbowy. And so is, look over here at ES. That's not rainbowy. That's much more selling action. Remember on my tapes, reds and purples and pinks, those are all selling or aggression to the downside colors. And the blues and greens, those are buying aggression to the ask side or to the buy side. That's what the colors mean in a way oversimplified nutshell. If you really want to read about them, go to the reconstructed settings, go to the font and colors, above ask, below bid, between the bid and the ask, sweeps. That's what all the different colors are. Okay. I don't see any more questions. Wow. Everybody learned all this and is ready to go do it tomorrow. Okay. So have we accomplished our objective? Why are we here tonight? We're here to learn about overnights. How are they different? I gave you a couple of key things. Every one of you next week has an assignment you already heard a tease about. Darren's already doing it, but every one of you is going to have to do a process and turn it into me by email. It doesn't have to look like mine. In fact, I don't want it to. I want it to look like you. And I know some of your personalities, so I want to see your personality reflected in your process. So step one to that is take the setups that we keep talking about, take the filters against those setups, whether they're time of day or they're instrument or they're news related or whatever. And that's how you build your criteria for your individual trades. And that's how you get it to the point where it becomes mechanical for you. If you look at the next couple of things we're going to do, the calendar. Okay, we're doing trading overnight right now, so we can actually delete that guy. That one's over. So the next thing, building your process, creation, adapt, improvise, overcome, the importance of art and fun, and delusions. Delusions like some are thinking that there's order flow encrypted into candles. That's an example of a delusion. It's something that does not exist. So we're going to talk about that in the next session. It is on the 24th. It will be long and very interactive, so try to be there if you can. But again, going back to our objectives here. So number one, the overnights, how they're different, and how your process has to understand that. Otherwise, you're going to get caught. You're going to get burned. You're going to have too much size on. You're going to do a range trade during the day that's going to work with a 5 lot, and then you're going to throw it on at night with a 5 lot, and you're going to lose $2,000 in 1 minute. And you're going to say, God, what did I do wrong? You didn't size down. If you're a 5 lot trader during the day, you should be doing a 1 lot with this stuff at night. So that's a good example. Okay, so all of you are going to have to build one of these. So the things we talked about tonight, Number one, how to trade overnights in general. Low volume, less size, watch out for news, blah, blah, blah. Watch out for the fact that all the indexes are derivatives of derivatives that are not trading right now. In other words, the S&P 500 is not trading. So anything that goes on over there is likely to be extreme, exaggerated, and people are likely to fade it. So always keep that in mind. What do we know about gold and what do we know about oil that makes them different? That was the other component of tonight's session. Number one, they are true commodities. They are derivatives of a true, actual thing, barrels of oil, gold bullion. Therefore, things can happen that make no sense whatsoever. Like we can go from 56 to 63 in a beat because the oil fields got bombed in Saudi Arabia. That happened, right? And the only thing you can do is trade the order flow. You know, that was a real good night for trading the high Momo setup. I mean, all you had to do was get long and get a stop underneath it, and you were all set. So that's what we've covered in this session, and that's what I want you to get out of this. Understanding ranges, and that ranges are whatever you want them to be, but make sure that your definition of the range you are trading is whatever the range you are trading and not the range from last Tuesday. After you enter the trade and you say to yourself, well, it's not working now, but if we go down 5 more ticks, that's the support level from Tuesday, the 31st of September. You are deluding yourself. You are kidding yourself. That kind of thinking will do nothing but lose you money. Forget price levels, take them off your charts, learn to trade price action. You will make much more money. In fact, you will probably make money if you've struggled to do that in the past. Okay, on process, when it is due. Yes, this will be assigned Sunday in detail. And I will explain how it will be due and how you should get it to me. Because we're going to do 2 different things. I'm going to have you guys, every one of you is going to email it to me. And then I'm going to post some of them and I'm going to explain what about them I thought was interesting. I won't attack anybody, but if anybody just completely whiffs it and ignores everything I say, I might use them as a bad example. But they would deserve it if they do that. So. Look, you know, those of you that are joining us new to the workshop, it's important you understand where I'm coming from. You know, I'm a professional trader who's 59 years old, and I run a venture capital fund, and I do 100 other things. I have no interest whatsoever in being in the computer order flow trading education business. I did that in the 2000s, made a lot of money doing it, had a lot of fun. I'm a professional educator. I did that for IBM. I did it for Microsoft. Go look at my LinkedIn. You'll know what I'm talking about. Blah, blah, blah. The reason I'm telling you all that is I'm not looking to be in the business of a furu and selling memberships. So that's why, for example, I allowed you guys in late. I may never do this again. It's a lot of energy. It takes a lot of time. But the cool thing is I'm really seeing people learn something that they can take home and act upon immediately. So, you know, that's my payoff. So, you know, when I say this is a once-in-a-lifetime unique opportunity, I really mean that. And so for any of you that are, you know, asking me questions now and you just joined the workshop, you know, this afternoon, and you have not watched every one of the recordings at least twice, my suggestion would be go do that and don't think about anything until you go do that. Because you really need to understand where I'm coming from or none of this is going to make sense. But once you do, it'll either make sense or you'll think I'm a total idiot. And if that's the case, go elsewhere. If you think it makes sense, listen. And that's the right word, listen. You know, you probably don't have anything to contribute to what I'm going to teach you except how well you can absorb it and the questions you ask. You know, at the first couple of webinars, a couple of people tried to tell me, well, you know, I use this or that. I don't care. I don't care about your MACD or your pivot or your fib. If you want to put it in a question like Amy did, I can frame it how you should consider it, and that is totally correct, and that's what you should do. But if you currently have some system you bought from somebody or whatever, and it uses pivots or blah, 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 nonsense, you know, sub A, nonsense sub B, whatever, you know, pick a term. Then the only way you're going to learn something from me is to just throw all that shit away, simplify your charts to having nothing on them but the elements that we use, and that's all explained in the docs chart stuff. I don't care if you mimic my charts. You don't need to do that. You don't need charts at all. We trade off the dome. But the whole point is that we are here to learn order flow, price action. And ultimately, you should be able to apply that to any instrument using any setups of your own. You'll all find your own bubbas. But my purpose is to show you really hardcore tested setups that I've been using for years with literally 20,000 trades behind every one of these. And many of them failures. I mean, you know, the characteristic of a master is that I have literally failed at my trades more times than all of you have tried them collectively. I mean, my HMOMO setup has 27,000 trades in that folder. I literally record every single one of them. I'm not exaggerating. And so I can tell you every metric about that setup. But the point is, you're here to benefit from that and to learn how to adapt that to your future. Don't go out there and try to reinvent the wheel with my setups. Just listen to what they are and you'll be able to make money with the concepts. That's what we're here for. This is not, you know, okay, the way the H reversal works is step one, you look for this. And when the 5-minute chart crosses the blah, 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 you enter with a 4-tick stop. That is nonsense. Full stop. All of that crap. Nonsense. You will hear that term over and over. That is a technical term in trading. You will learn it after your first 3 or 4 decades, the term nonsense. It is everything out there that you've heard collectively, including technical analysis in the master's books like John Murphy's book. That stuff is great. It is a great foundation for how to make money in the markets. But it is not a tradable edge. You can construct tradable edges out of those concepts. But in and of themselves, they are, what everybody? Nonsense. They are not edges, contrary to what anybody else will tell you. If you see that on Twitter or somebody selling their $10,000 system or whatever the heck it is bullshit. I promise you. Yes, it might work under one set of conditions with one instrument, but it isn't worth 5 cents because you can build your own just as easily. So forget instruments, forget strategies. Learn price action setups, things that occur over and over again as a result of trading behavior of participants. That's all you need to know. Okay. Hey, you know what? There goes 10K, Kevin's saying. I spent probably 100K on that crap over my 46 years, 59 years age. And you know, some of it, look, if you get one nugget out of everything you buy or every webinar you go to, you know, that's always my objective when I go to a free webinar that Pete does or that John Grady does or that one of the Axia guy does, you know, Brannigan or whatever. The only thing I want out of that is one good idea. So, you know, I'll put on one of those podcasts in the car and I'll drive to LA. 90 minutes later, okay, I got one good idea out of that. That is the only thing you care about. But, you know, thinking that you're going to give somebody $5,000 or $10,000 and they're going to make you a trader and you're going to trade for a living with your $5,000 account after that. I mean, if you're that stupid, you deserve to lose the money. Yes, we're all that stupid. And until you've gone through that a couple of cycles, you know, you think all of these yo-yos are legitimate. You know, just search for ESF on Twitter. Trading makes money. Okay, here's a Furu. He follows me too. Look at that. He has 22 followers. Trading makes money. Okay, I hope that's not one of you guys. But see here, you know, oh, here we go. The 1R. All right, my risk is 1R and my target is 2.5R. What is that, everybody? I wish we were all in a classroom so you could all say it together. I'll type it. It is nonsense. That is what that is. Complete and total friggin' nonsense. I'm glad Mr. Trading Makes Money follows me. Maybe he will learn something. Pro trader and mentor with 10 years experience. Okay, be careful, guys. Be really careful. He's in Australia and he has 20 followers. Okay, is this any of you guys? Seriously? Look at this. Free market update. I hate spam. Oh my God. He wants to push notifications. Now, let's see. Let's find out all about him. Price action is the only way to success. Well, that's correct. But you're not going to learn it from Mr. Let's see. Trading support and resistance the right way. You know, that was the right way in 1984. Okay? Are we having fun yet? This is what you will find on Twitter, guys. I'm glad he follows me. Maybe he'll learn something. A lot of those guys do follow me because what I love to do is go out and pick on them on Twitter. I was just doing that with this guy. I'm just having fun right now. But this guy, where did he go? I picked up 3 more followers by picking on Corey. Because Corey said, look at this. Fair value is right here. And price always goes to fair value. So if you want to have some fun, go look at my conversation with him because I responded to that was complete and total nonsense. And he tried to engage me, but it didn't really go anywhere. He might have deleted it. Hold on a second. Oh, yeah, here he is. He's saying he's doing something right if I decided to troll him. Anyway, go check this thread out. It was pretty funny, but it's a good example of somebody that knows enough to be dangerous. And, a little knowledge is dangerous. That was a cool example of one. Okay, let's see. What else did we want to do here? Just spit up your water. Good. Okay. Spit take. I love those. All right, let's see. One other thing. Did we look at the total P&L? I think we did since we stopped trading. It's not going to let me do that. Oh, no, here we go. Okay, there we are. Okay. Yeah, okay, there's a few more of them came through. So I just wanted to show you, even, that $50 loss, remember the context that happened in. We were trying to scale into that momentum trade. So, if you learn that ability to just read the action, your numbers will look like this or better. You guys have seen mine, 70, 80%. It's just about getting in tune with this ebb and flow. And the way I recommend that you do that, again, try LRCs if you're having trouble seeing the ranges on the domes, but try to get away from that and get onto the domes as fast as you can, because I think you'll learn more there. The one tick drill is a great exercise. Ooh, look at gold over here. So remember I said that if it started to go down there, it's probably going to push it a little bit. See, that's getting really interesting. And you see a couple of people are positioning themselves to try to scale into that as that range extends down. And hang on, let's see if I can give you another view of that. Okay, so here it is on the tick chart. And, if you were just watching this, if you just kind of drew a mental line right there and just sold this spot as that, remember, we were watching that exact spot, as it started to sell, the volume, it fell through that on the most volume it had recently. And, it just kept going down on more volume. Look at that one down there. And it's all on the sell side. So it wasn't hard to see where to get into that. And remember what I've told you about LRCs. If you are using them, when they line up in parallel like that in one direction, that is HMOMO. So the only way you want to play that is with the HMOMO setup until it starts to turn. And it will, as the momentum changes if it does. So, that's a good way to kind of look for places to maybe get long here. So let's keep going for a few more minutes. Okay, there's a little bit of buying coming in on the chart, and see, that's what it looks like on the dome. To me, this is a whole lot easier to understand than trying to look at this. But this is a really good example. And so we can see our meter too. It's this meter right here. Remember what these are, is they're taking this tape and they're consolidating 300 seconds and 60 seconds. So 1 minute and 5 minutes of this behavior is being consolidated into these 2 meters. So it's still on the sell side, but we see buyers stepping up. So, you could jump in there with a long, or you might even want to just take the market. So now you're long with one. Now we probably don't want that one. So, you're starting to see if this turn happens. And, if you get into that at the right spot, it might just become a real nifty little trade here. Who knows? So here's the 20-second one. That's where you want to look for the high volume reversal if you're going to get it at all. So you want to look for this inflection point to have a change in the delta behavior and an increase in volume, because that would be indication that there's potentially the sellers have washed out. And, see, we have the first indication that little range is breaking because we're at the top of it now again. And the delta is getting positive. So I have very little to risk with my long here. And if it starts going this way, again, I'm going to probably think about adding to that, with my scale as a trader. But if I was a one-lot trader, I probably wouldn't let this have any room at all. I'd probably just give it a tick or two and then get out. But right now, again, this is the behavior I told you want to look for. Ask lift, ask lift, ask lift. Sellers tried, couldn't push it down, lift again. Another attempt to sell it. Let's see how they do this time. In this instance, if they cannot get any momentum going down, then just by definition of the range, we should get back up to the bulge, because that's just the statistics of a bell-shaped curve. We're at standard deviation number 1 here. So odds are more people will take us this way. When we get to standard deviation number 2, out here, the odds get even higher, and that's literally all we're doing. What is he talking about? For those of you that have not had statistics, it's really simple stuff. It looks like this. And all we're saying is that, let me find a simple one. Okay, if you look at the center of a bell-shaped curve, there will be some, and let's just call these 1 standard deviation and 2 standard deviations, even though that's not what it is. If you get out to 2, you will get 90% or so of the action in a bell-shaped curve. So if you're looking at that as a trader, all you have to do is understand that the odds that a move at this end of the edge will continue unless it gains momentum are very, very low. So that's the exception. If momentum picks up, then it probably will continue down, but that's not what's happening. It's turning. See, the range has stopped respecting this down range, and it's the fast one is saying, okay, the new range has violated the top of the old range. Therefore, we can conclude it might be turning. Now, the 20-second isn't saying that yet. It's still showing an acceleration. And so this is what I mean when I say you guys should always be comparing. There we go. We got another 1 ticker. So, okay, 1 tick drill for another winner. You can do that all day. You can do that for $500, $5,000, take your pick. So what this is saying is that if you compare time to action, ticks are action, that this movement is not reflected yet in the time scale, that people who are trying to make a vertical up and down action look sideways, but that's what it will do. It will stretch out like, oh my God, we're going sideways, when the reality is we're not going sideways. We're going up, but you don't see it reflected there yet. On the other hand, if I were to make this a 5-second bar, you would see it. And why would you see it? Because the time is closer to the action measurement I'm using. So that's why it's really important to constantly be gaming the energy of a move in time versus the actual energy of the move itself. And that's why I like this 2 set of numbers. I like 20 seconds on this one with 2 sets of LRCs, and I like 10 ticks on this one. If you do that, generally you will always be on the right side of the tape, or you will get out of your trades at a more or less optimal spot, or at least the first optimal spot. If it continues, you'll get a warning that that's what's happening. Okay, I don't know how many people are left, 27. Okay, a few people bailed, but 2 hours. Okay, I decided I was going to make this 2 hours or a little longer if we had more questions. 2 hours is going to be in 8 minutes. So I'm going to go get some more coffee, and I'm going to give you 8 minutes to post questions. If it's a question that's really complicated and you want to just ask by voice, I will unmute you and allow you to do that. So either post typed questions or post that you would like to be called on, and we will go from there. Yes, Dr. Shaw, good. I'm glad you're listening and learning. That's what I want you all to do, My first mentor was a pretty funny guy. He was a pit trader, old school, hardcore. His family had been specialists on the New York Stock Exchange. And he was pretty funny because anytime I used a word that he didn't think was appropriate, he just slapped me. And anytime I opened my mouth when he was talking, he slapped me. Literally. He just bopped me on the mouth and just say, "Why are you talking?" I'd say, "I wanted to comment on what you said." He said, "What do you know? You don't know fucking nothing. Shut your mouth and listen. And when you know enough to answer, I'll ask you a question." So that's something good to keep in mind. I'll be back in a minute.
Okay, stop throwing erasers. The teacher is back in the room. All right, let's see. Okay, before I answer these questions, I want to throw a question that you can answer and type, or you can, oh, he left. Okay, one of the guys from that was new, I was going to ask him, but he left. That was John. Let's see if anybody else is still here that is among them. No. All right. Oh, wait, Philippe is here. Philippe, my question, you're one of our brand new guys, and this is the first thing you've been to. So is this interesting stuff? Are you learning anything? Is it what you thought? Just curious. Give me a couple of comments there in the text chat. And let me look at what Kevin's got here. I'm basically trying to learn to trade overnight due to EST 9 to 5. Okay, looking for trades in GC, small winners. Okay, stop. Kevin, making 2 to 3 trades per night. Why? Why don't you just take a couple of trades until they're stopped being profitable? And then if you're profitable, why wouldn't you want to do 20 trades if you're making $50 each? I mean, I don't understand this logic, and I hear this from new traders all the time. My objective is to do 3 trades per day, and I want to make 5. Why? Thanks, Philippe. Seriously, Kevin, why don't you just look at it and say, okay, there's an opportunity to make money trading gold at night. And I want to do it as a scalper with small winners, okay? And I'm only going to do 1 contract. So I'll tell you right now, you should be doing 1 tick drills using the range and Momo. And yeah, you don't need anything more than that. That's all I would be doing. So Kevin, if I were you, I would be sitting there with a dome 24 hours a day doing 1 tick drills in gold and learning how gold works. Because it is one of those that the people that specialize in it love it. You know, you only have to buy 1 set of data. If you're doing it through Top Step, it's the COMEX, so it's 1 market. There are no real correlated markets to watch. So, you know, gold pretty much does whatever it wants to do, although it frequently will operate the opposite of, hang on, I'm just moving these out of the way. It'll operate the opposite of the indexes because, you know, it's kind of the standard, you know, risk arbitrage trade. But other than that, that's a really legitimate business plan, except the I want to make 2 or 3 trades per night part. You know, you should trade as long as there's opportunity. Some nights there may be no trades at all. You have to learn how to define the ranges and get really good at reading gold's order flow. For example, I mean, if you did nothing what I did, except what I did tonight, you know, if you go back and look at our results, if it will let me, if Zoom will allow me to show that again. Hold on, there it is. Okay, so here's our trades, and one of the things you can do when you do this is you can just filter it for 1 instrument. So let's just use GC. Okay, so there's the gold trades. So you literally saw me doing that. I mean, these were literally 1 and 2 tick drills, and you could have made, you know, a nice amount of money doing that with a 1 lot. And you know, what was the drawdown here? $13. Here's the summary for those trades. $13 drawdown, 66% winners. Yeah. Is there any reason you couldn't do this and make, you know, a couple of grand a month? There's no reason at all. But you got to get good at reading order flow. It has nothing to do with anything else. Yes, again, I would use range and HMOMO setups. Okay, let's see what's next. Anthony, Tony, Howard 10. This has been very helpful. One issue I have is I struggle to move from theory concepts into practice. That, I'll tell you, I'm not going to read the rest of your question, Anthony Howard 10. That's because you have been doing this for like 12 months or 18 months, and you think that's enough time to even understand the theory, let alone putting it in practice. And it's not. It needs to be years. Okay, you have, so some solid steps you can use is the 1 tick drill, and you know, just getting rid of the charts or putting the charts up with LRCs. All of the things that I'm telling you are ways you can learn to do this. Should you focus on 1 market or 1 setup for a couple of weeks? You need to find your Bubba. I've said this over and over again. I don't know enough about your personality other than, you know, the chats we've had privately. But, you know, I know you're kind of a finance guy, and I know your background and your age and, you know, your home situation. And given all that, if I were you, I would be an index scalper because of the correlation you get between the multiple markets and because of the quality of the Open 5 setup. The Open 5 setup is one that you can do on East Coast time zone pretty easily.
You know, it's even if you have to leave work for half an hour and go do it. A friend of mine does that. He just, you know, every day between the open and 45 minutes after the open, he leaves his office, he goes home to his home office, he trades, and then he goes back to the office. And everybody who knows him knows that he will not take a phone call. And that's it. You know, that's what he does. And that works. So, you know, again, you know, anytime you put up something like you want a checklist or whatever, my reaction to that's going to be, you're not listening to me. What I want you to be doing is I want you to be building a process. You know, when you and I first met, now I'm going to pick on you, Tony. When you and I first met before the workshop on Facebook and we talked in Messenger a little bit, the first thing I told you was that you needed a structured process. It's the first thing I tell all of you guys. But most of you ignore it, and you're still ignoring it, and it's due next week. So the answer to your question is that. That's my thoughts. I think everything you want to do is feasible, but I think you have this, you know, I'm going to college and, you know, I pick up the textbook and the textbook says that the setup has criteria A, B, C. You know, it's a lot like what Samer was saying in some of the webinars and in the Slack, and it just doesn't work like that. There is no checklist. Okay, David, shoot the question. Go. Break, 5 minutes, do it. Okay, let's see. Yeah, you know, Philippe, you need to watch all the videos before you even focus on the Open 5. Don't even make that conclusion until you've watched every recording, and then answer that question. Okay, Bar, what do you mean about coming back to the middle of the range? I just mean that whatever range you're using, you know, for example, let's just go back to gold, Bar. There are really two profiles here. You know, there's this one up here and there's this one down here, and they kind of formed at two different times of the day. So a TPO chart would show that really well. But my point is, you know, the range is this profile, and once it started getting to the middle, then it would make those two profiles become one giant one. And so the kind of trades I look for is from the edge, like we have now, toward the middle. And if it was the whole range, it would be this middle here. That's my natural sense that I do, because the market tends to resort and revert back to, you know, kind of agreed upon value. You know, of course, unless something changes that and we break out of that range. So that's really the answer to your question. The middle, depending on what range I'm defining, that's what I mean. I hope that makes more sense. And the reason I use gold is because it's got that dual distribution. Okay, let's see. Kevin, you're up $80 in sim. Okay, cool, great. You know, I would spend 3 more months at least in the sim playing with gold, doing one tick drills and, you know, learning its ebb and flow. And, you know, you may find your Bubba right there. Gold is totally unique. It doesn't trade like anything else because of all the things I've said. Okay, let's see. Tomas. Okay, quickly. I've been practicing one trick just Monday on the first. Okay, today was the first day I've been plus 60. Okay, 85% of the time. No, you don't need to change anything, because the whole purpose of the drill is to learn something. If you're doing that and you're making money and you're learning something, then you're doing the drill right. That's it. You guys overcomplicate everything. The reason that I won't give you any criteria on how to use a one tick drill is because there aren't any. Your objective is to get a tick. No stop, no target, just discretion. Go. That's it. And the idea is to do it for a day or until you get to $500, positive or negative. And if you can get one ticks to $500, that's a really good day of drilling. Okay, you love range. Hey, I love range too, but remember, the only place you can really get burned doing range trades is when the range is no longer the range and your bias still has you adding to that one. So the example that I did in this gold trade, if I was down here and I was adding to it, and then all of a sudden we just took out the lows and dropped down here to 69, you know, with a 4 lot on, guess what, guys? How many ticks is that? That trade would have been about a minus $700. You can't stomach that kind of risk if you're a 1 lot trader. So you can't work the ranges and give them that much room and scale them that way. You got to play with 1 lots and go for 1 tick, 2 tick winners until you get good at it. Okay, what requires more discretion, entry or exit? Oh, this is a famous Furu conversation on Twitter that's been going on for 5 years. If you can find it somewhere. I'm cracking up because it just depends on who you ask. But according to me, if you want to know what Doc says, it's a Docism. Look at my 3 rules. What are my 3 rules? Number 1, good trades work right away. That's the answer to your question. A hint, Darren. Number 2, always take profits. Number 3, don't lose money. Okay. So the answer to your question is, what's more important, the entry or the exit? By far, the entry. You get the entry right, doesn't matter. You can exit wherever the hell you want. But if you fuck up the entry, you're chasing your tail. So always. But there's idiots, that are trading levels and pivots and no, what's more important is my target at S2 because that's 30% of a retrace from the Fibonacci level on my MACD from November of 2018. That entire paragraph is what we refer to as nonsense here in reality. Okay, let's see. Is brainstorming, you explained exactly good. Okay, cool. Good, David. Okay, yeah, Kawika, the way to play these ranges is to nibble. If you're a multi-lot trader, do exactly what I did. We just made $300 tonight, and I wasn't even paying attention. Okay, I'm talking and I'm watching, you guys chat, and so the point is, that's not luck. It's just a skill to a methodical approach that I've been doing over and over again. So I've just taught myself to do it so that no matter what else I'm doing, I can still do that too. It's kind of like, can you ride a bicycle and talk on the phone at the same time? Well, when you were 3, probably not. But, ever since then, yeah, you probably could ride a bike and talk on the phone. Well, that's what I'm doing here. I'm talking on the phone and I'm riding a bicycle because it's that elementary to me. That's what you have to get this to, Tony Howerton and David and Kavika, those guys, those of you who are trying to figure out, Kevin, if this is your Bubba and if you could make a living doing this or even just make a supplemental income, that's really what you've got to be asking yourself. Can you get to the point where you can just make decisions like that without, missing a beat? And that's the point between now and whenever you try to go to Top Step or whatever and get funded doing that or do it in your real live account, get a really good sim going and just do that nonstop between now and February. And then tell me how it's going. Okay, good. I'm glad I cracked you up. That's always my intention. I love to pick on people and I love to have fun in these webinars and call people out when they're being really daft. But, the bottom line here is this is really straightforward and simple. And, anything you read on Twitter is bullshit. And, that's trading. If you can get a process that works for you, and again, this one works for me because this one's mine, build your own. You're welcome to steal from mine and anybody else's. That's all it takes. So yeah, if you guys are new, put 3 setups on there or 1 or 2 and, get the rest of this down. What's unique to you? I have chronic pain. What do you have a new baby or you have, an ex-wife that is an alcoholic and she calls 25 times a day, whatever it is, you got to make up your own stuff. And then once you've got that, step 2 should be the same. And then step 3 should be your take on your setups based on what you've learned. And that will be the assignment next week. We have an entire webinar on that on the 24th, which I think is Sunday, right before the holiday week. Yeah, it's Sunday, that webinar, and then that's Thanksgiving week. We'll have some live trading that week and not much else. Okay, so keep developing the process until you can make money consistently with it. No, you don't stop there, David. You keep developing the process forever. I've been doing this 46 years. I've adjusted my process 3 times just since you guys have been watching. So what does this say right here? Improvise, adapt, overcome. That's also part of Sunday's session. That is your mantra. That's how you do it. You keep working your process. Every time you have a bad day or a losing trade, you go back and you say, how can I adapt so that doesn't happen next time? That's exactly what that means. All right, this is now 2 hours and 8 minutes. I am going to call it there. Otherwise, my recording bill goes up to $300. I'm trying to keep us under. I think we've got like 100 gigs now or something, and it's getting bigger and bigger. And Zoom makes a lot of money with selling web space for recordings. So, all right, guys, I'm glad y'all learned something. Thank you. You're welcome. You're welcome. You're welcome. Have a good evening. I'll talk to y'all later.